Hi, I'm Amit Premchandani and I'm here to discuss the UTI Value Opportunity Fund. UTI Value Opportunity Fund is an open-ended equity scheme following a value investment strategy. We focus on intrinsic value rather than the traditional multiple-based definition of value. The fund is managed essentially based on three pillars. First, sector level valuation. Valuation approach is important for us at a sectoral level with the additional filter that terminal value risk should be minimum in that sector. We focus on free cash flow yield and price to book to arrive at valuation comfort at a sector level. Second, at a stock level, we follow a barbell approach, where on one hand, when we invest in stocks which are undergoing cyclically challenging environment, we look at the balance sheet of that stock as well as the ability of that company to perform during favorable condition. While on the other hand, implied growth in the stock is the guardrail which we use to invest in growth-oriented companies. Also, we try to invest in companies which are cheap relative to expectations. We use the UTI score alpha framework to make stock selection, where operating cash flow is a hygiene factor, while average ROC is used to filter stocks at both ends of the barbell. The third lever which we use is allocation across market cap. We use valuation as a benchmark to make allocation, especially between small cap and mid cap. As far as the portfolio construction is concerned, as on August end 2022, auto is a large overweight in the portfolio. We think volume growth will revive in the automobile sector, especially in the two-wheelers and passenger vehicle. Replacement demand is likely to come up, and the companies in the auto sector are essentially cash rich. Pharma is another sector where we find valuation comfortable. Here we have used the barbell approach to invest on one hand in companies which have high overseas exposure, while on the other hand, we have also invested in companies with a very large domestic exposure. Increasingly, we are increasing our exposure to domestic-oriented companies with high chronic share. We have a 4% overweight in the sector. IT is still an underweight. Sector-level valuations are still significantly above average, while demand may see some headwind on account of sharp slowdown expected in both US and Europe. We understand that this sector will reflect less cyclicity as compared to its own history as well as related to the other sectors. Also, the sector is cash generating, and also the capital allocation is very shareholder friendly. Hence, we have reduced our underweight over the last one quarter. Financial is the largest exposure in the fund with a weight of around 33% and a 3% overweight. We have high active share across large banks which are reflecting high growth, have adequate capital and are well covered as far as NPL is concerned. We are also structurally positive on the real estate sector, which has come out of the down cycle after 7 or 8 years. We already see volume growth picking up and inventory levels reducing. However, any sharp increase in the domestic interest rate may act as a headwind to the sector. Recently, we have reduced our exposure in the capital goods segment given that valuation are no longer comfortable. That is broadly the summary of the UTI Value Opportunity Fund. Thank you for listening in.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.